Taking a look at Ethereum, we can see that Ethereum has broken the low from February, which means that we are still very much so inside of a bear market. Now, we can take a very basic downtrend from October and simply connect it to the trend that has continued in January and May, where the price of Ethereum has remained below the downtrend. We can also take a fib from the same high and pull it down to the low, and we can see that we are now right below the 236, which is also on top of the downtrend. This does imply that a move back to the downtrend is possible. However, failure to break 1983 would actually result in another low for Ethereum. It is also worth noting that Ethereum has been forming bear flag structures throughout the entire bear market. So another bear flag forming may actually trigger a small rally back to the trend line. However, again, failure to break over 1970 will actually result in another low. And we can take a fib from the low up to the high, and we can see that we have landed on the 141 at 1531. We can see that the 241 is all the way down at $1,000, matching the low from 2022, which means that as long as Ethereum remains below 1970, there's actually an increased probability that Ethereum will be coming to these lower prices between 1,000 and 1,100. And the only way to invalidate these lower prices is to see the price reclaim 1983 and actually trigger a larger rally back to this 0.5 at 26 and the 382 first at 2350. But these higher prices are only possible if the price of Bitcoin is able to break out, which as of now has not been the case, in my opinion.